It's a sad fact of life that most of us will never be able to earn enough money through our jobs to achieve our long term financial goals. Sure, a higher salary can help, but at some point, we have to face the reality that we can't work forever. Hello, everyone. Welcome to Invest Wisdom channel. If you are new to this channel, do like and subscribe to the channel. This video will discuss things to know before investing this 2022. Investing 101. Investing can be a great way to grow your money, but it's essential to understand the risks involved before investing. In this video, Success Wisdom will discuss some things you should know before investing. Now, investment advice can be complicated and overwhelming, but we will break it down for you in a way that's easy to understand. So whether you're a beginner or an experienced investor, this video is for you. Number 1. The current market conditions. When it comes to investing, timing is everything. Before investing your money, it's essential to understand the current market conditions. Is the market in a slump or is it on the rebound? Attention to economic indicators can give you a good idea of where the market is heading. Knowing where the market is headed will help you make wise investment choices and avoid potential losses. For example, if housing starts are up, that's usually a sign that the market is improving and becoming more confident. On the other hand, if consumer confidence is down, that may indicate that the market is cooling off and you should tread cautiously before making any investments. By keeping tabs on the current market conditions, you'll be in a much better position to make wise investment choices. Number 2. The potential risks and rewards involved in investing. You should always research the potential risks and rewards involved. While there is always a potential to make a profit, it's important to remember that there is also the potential to lose money. When considering an investment, be sure to look at the company's or securities' past performance and any current news that could impact future performance. It's also important to have realistic expectations for both the short and long term. For example, if you're looking for a quick return, you may be more likely to experience losses. On the other hand, if you're investing for the long term, you may be more likely to weather short-term fluctuations. Number 3. What sectors are expected to grow the most over the next 5 years? As we've always said, timing is everything. When it comes to investing, timing is everything. You want to invest in sectors that are expected to grow soon. So, which sectors are expected to boost the most over the upcoming 5 years? One promising sector is healthcare. The aging population is driving up demand for medical services, and new technologies are making it possible to provide more effective treatments for a wide range of conditions. Another sector that is expected to experience substantial growth is renewable energy. With the world's population expected to reach 9 billion by 2050, there is a growing need for sustainable energy sources. Wind and solar power are becoming increasingly cost-effective, making them a significant force in the global energy market. These are just two of the many sectors expected to see significant growth over the next 5 years. So if you're looking to invest, do your research and identify the industries prime for expansion. Don't forget to like and subscribe to this channel if you like this video. Number 4. How to allocate your investments portfolio for maximum growth. Before investing, it is essential to research and give your investment portfolio for top growth. This means figuring out what percentage of your portfolio should be in stocks, bonds, and cash. For most people, a 60-40 split is a good starting point. This means that 60% of your portfolio is in stocks and 40% is in bonds. However, you may want to adjust this based on your age, risk tolerance, and investment goals. For example, Younger investors may want to have a higher percentage of their portfolio in stocks since they have a longer time horizon and can afford to take on more risk. However, older investors may want to have a lower percentage of their portfolio in stocks since they are closer to retirement and need to preserve their capital. Once you have allocated your investment portfolio, you can start researching specific investments. This includes looking at factors such as the company's financials, products or services, competitive landscape, and overall market conditions. Number 5. Which countries offer the best opportunities for investors? Any savvy investor knows they need to diversify their portfolio to make the most of their money. This means investing in various countries to spread the risk and potential for loss. But which countries offer the best opportunities for investors? There are several factors to consider when making this decision. Firstly, you need to look at the overall stability of the country. This includes factors such as the political climate, economic conditions, and social stability. You also need to look at the legal framework for property rights and investment regulations. And finally, you need to consider the potential return on investment or ROI concerning the risks involved. Based on these criteria, some of the best countries for investors include Australia, Canada, Denmark, Germany, and the United Kingdom. These countries offer a combination of stability, robust legal frameworks, and good ROI prospects. So if you're looking to expand your portfolio into new territory, these are some of the best places to start. Number 6. The importance of long-term planning. In terms of investing, long-term planning is essential. Not only does it give you a clear goal to work towards, but it also helps to maximize your returns and minimize your risks. By taking a strategic approach to invest, you can set yourself up for success in the long run. One of the key benefits of long-term planning is that it allows you to take advantage of compound interest. This is when you earn interest not only on your initial investment, but also on the interest accumulated over time. The longer you invest, the more you stand to benefit from compound interest. As a result, long-term planning can help you grow your wealth more quickly than if you were investing for a shorter period. Another benefit of long-term planning is that it gives you a greater degree of flexibility when it comes to choosing investments. When you have a longer time horizon, you can afford to take more risks with your money, knowing you have time to recover from any short-term losses. This can help you maximize your returns and reach your financial goals sooner. Number 7. How to diversify your portfolio. A portfolio is a mix of different investments, each with its own risk and return. Diversification is to spread your money across foreign investments to reduce your overall risk. For example, if you invest only in stocks, you're taking on the greater risk of owning just one type of investment. But if you diversify by investing in stocks, bonds, and cash equivalents, you're spreading your risk among different asset classes. That way, if one type of investment loses value, the others may still be doing well. The key is to find the right mix of investments for your goals, time frame, and risk tolerance. A financial professional can help you create a diversified portfolio suitable for you. Lastly, avoid the too good to be true investments. Unfortunately, scams, Ponzi schemes, and other too good to be true investments abound. Many people have lost a great deal of money by investing in something that turned out to be a fraud. This is why it is important to do your research before investing in anything. If an investment sounds too good to be true, it probably is. There are plenty of legitimate investment opportunities. There's no need to take unnecessary risks. Check out the company or individual offering the investment, and don't hesitate to ask questions. If you're not sure about something, don't invest in it. While no one can predict the future with certainty, we believe these are some sound investment principles to keep in mind as you plan for your financial future. We hope you found this information helpful and wish you all the best in your investing endeavors. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to the channel, and comment below. Thank you and goodbye.